Hi everyone. Welcome to this session around here. This is the fireside chat here. The topic today is fintech and sustainability innovation, the mindset change of high net worth individuals. Hi everyone. My name is Desmond Marshall, MD and founder of Rouge International and Rouge Ventures. Today we have with me today a good friend of mine, Florence Kui, who is Chief Operating Officer Asia, Deputy North Asia Region Head for Private Wealth Management under Goldman Sachs. Welcome, Florence.
Hello. Hi, everybody.
Hi. So let's get straight into the topic around here. So of course, everyone knows that 2020 isn't really a very good year because of COVID around here. But the thing is, the quickest thing to rebound in the finance area, definitely it's in the finance area and also with the investors. But the thing is, it's going to be very interesting to actually understand a lot of what's going to happen. So, but before we go on that, let us give each other a brief introduction in terms of what we do first. So let me start first. So my company is Rouge International and Rouge Ventures, and one of the things that we do is actually we do private investigation. We do private investigation in terms of sustainability innovation companies too. So and what it is basically that investors come up to us and say, hey, I want to invest in a sustainability innovation or innovation company. Can you help me check up on them first before we actually do things? So we find dirt, we find red flags, we find good things, we find bad things, and we do the analysis for them, whether it's going to be a long-term thing or a short-term thing. And so they have the investors will have all the information before they actually make that decision. So over to you, Florence. Have a
Sure.
little go in intro in terms of what you do.
Yeah, sure. I mean, I work in Goldman Sachs, and specifically, I work in the private wealth management area. Our business basically service ultra high net worth clients in the region, covering China, Hong Kong, Taiwan, and Southeast Asia. And I've been in the firm 21 years, but I've been, working since like a child. So don't misunderstand my age here. And obviously my role is, looking after our clients in the region, thinking through, from an investment perspective, platform perspective, strategy perspective, how do we service these clients better? Obviously clients are getting more demanding over time, as we have all noticed. How do we continue to satisfy their needs? And more importantly, how do we, continue to become the trusted advisors over time and service, multiple generations over the years? So that's who I am and what I do.
Great, and it's good as well because both of us actually deal with investors, high net worth individuals as well. And so going back to the thing is, yeah, 2020 is COVID, and it's changed a lot of things. And as we see that investors' mindset has changed a lot, their habits have changed a lot. Let me just go deep direct into Florence's mind. What exactly or anything significant that you see from your side around here that your investors have changed significantly? Of course, we all know that they have slowed down, they might be more cautious, etc., etc. But are there anything specifically that is happening to your side of investors?
Yeah, I think a couple of angles to this question. So first of all, I mean, with the pandemic, the one word that came to everybody's mind is health, right? We have to have good health. If not, then it's not good. So healthcare, so a couple of sectors has been, very interesting and popular. And from a client mindset perspective, healthcare is, the obvious word because of the consciousness towards, maintaining good health for everybody in the world. So that would be, again, one sector where we're seeing a lot of, investors kind of gearing their investments towards that sector. Secondly, obviously with the pandemic, social distancing is a requirement. Post-COVID, I'm sure people are a lot more aware of social distancing, and with the whole sort of the ability to connect digitally, there is a lot of talks about, well, business, what's the norm going forward? So sectors like, consumer business, where, the entire thing is shifted towards an online model. Logistics being a sector which is, ancillary to the consumer business, being done online. Technology is a big thing because obviously, you and I are now doing this virtually. We've never had, would not have thought about that in the past, that we don't have to go to a conference to speak at a conference. So, your online mediums, your 5G, these are all mega trends from an investor perspective where they're definitely, seeing a demand and interest. And more importantly, I would say from a mindset perspective, to answer your second part of your question, this whole, I guess, ESG awareness has been there, by the way. It's not a new concept. It's, the buzzword has been there for at least 5 years in the region. What we're seeing actually is with the pandemic, people have turned their awareness into actions, right? So, in the past 4 years, we've been like, you have a lot of conferences. I'm sure you have personally done a lot of conferences. We have done a lot of conferences. There's a lot of discussion around that topic.
Right.
But what we're seeing now is investors are asking us, clients are asking us, okay, I think I've kind of understood what this concept is of ESG or in sustainability investing. So what do we do now? So how do we put into actions? So I think that's what we're seeing as a change, and the penetration rate of clients who are now putting money into actions are a lot higher than I would say a year ago and certainly 5 years ago. So I would say that's sort of what we see as a core change in people's mindset.
Right. Well, it's interesting as well because when we're talking about like sustainability, we've been doing it for quite some time already. The thing is, when we were talking about sustainability back then, people were thinking about, okay, this is charity. This is something that's not going to have any returns coming in, so let's forget about it. Or hey, let's do a show we call greenwashing. So let's do a show only. And then we'll just put in, like, probably back a few years ago, we were doing some research, and they were saying, hey, we were just going to put like 5% of our portfolio into ESG. Now it's 20% more than that. So it's interesting how these people, and yes, you're quite right where people talk about, hey, we actually have to do something, and they're actually seeing some good returns too as well, because everything seems to be fairly.
That's right.
So
I read in some report that, globally the ESG assets have reached something like $40 trillion in the world.
A lot,
and even looking at some Morningstar report earlier, first quarter this year, I know it's a little bit dated, but first quarter in itself this year, seeing an inflow of $46 billion when a lot of the, asset classes are not doing as well. So you can see that there is, in fact, quite a bit of actions going on in that space from investors generally across all segments, actually.
Exactly. I just posted something on to LinkedIn as well, previously as well. And we were talking about the big T. So it's a trillion thing coming along here.
Exactly.
So
it's
a big T, not a big bean anymore. So so which means that from their point of view, that they're really into a very positive in terms of sustainability related investments. So from your side of things, do you actively, well, before they come over to you, did you actually tell them about these things, or is this part of your portfolio proposition to them? Or they just come out and say, hey, out of blue, I want alternative proteins, I want man-made or cellular meat coming in. Do you get these kind of things coming in?
Yeah, we get a lot of different things. People ask us randomly, is there a fund I can buy, or is there, an investing I can do? And I think we have been trying to sort of talk to our clients and try to kind of give them a framework, right? And this is how we think about sustainable investing. And there are a couple of parts to it. Number one would be something more close to home when a lot of people are doing, which is a thematic side, right? More satellite, i.e., again, technology fund, healthcare, environmental stuff. These are very thematic megatrend stuff, which again, a lot of investors are, pouring a lot of money into it. And from their perspective on this satellite investing, their expectation is really versus some benchmark, right? MSCI technology and the others. So that's one part of sustainable investing. The second part is what I call, the ESG investing. I know there's a lot of jargon here, but so it's more like incorporating ESG into portfolio construction. And what do I mean by that? So when we look at holistic, what we call the core portfolio construction, right? The core portfolio, you would overlay it. Some clients would say, hey, can I overlay it with ESG stuff? And we were like, of course. Now, the good thing is there's a lot of ESG things to do. The hard thing is everybody's ESG's definition is different. Right? Because you have different thing, I have a different thing. So there's no like one thing called let's do ESG together, or let's find the ESG product, because it means different things for different person. So therefore, in the portfolio construction process, we would obviously, as part of understanding clients' needs and all that, figuring out what is the real cause that they wanted to pursue, and therefore implement overlay implementation tools like negative screening, right, or positive screening in. Certain things I don't like, we don't want to be investing in these companies, so great, we'll screen them out. Or certain things I'm particularly passionate about, let's make sure that in the portfolio construction, we include these companies in my portfolio. So that's the second part, which is, again, portfolio construction overlaying with ESG as an idea. And thirdly, is a more longer term spectrum is impact investing, right? Whereby it's more direct investing into a company where they have, again, a particular cause for, and let's say a solar energy company, right? And that will be more longer term horizon, 5-10 year type sort of time horizon, and it can be multiple sort of forms, right? In debt form, in private equity form, and in whatever form. So that's, again, it's how we think about the framework of sustainable investments. It's, your tactical, your satellite bucket through thematic funds, the core portfolio construction with ESG as a tool with overlaying ESG concepts into it. And then thirdly, impact investing, which is the longer term direct investments. So yes, clients come to us with different questions, but we try to kind of help clients think through from a holistic perspective, how should we be thinking about it in a bigger picture, right? Because you can buy a fund, you can buy another fund. What does that really mean to the client? Because again, as I said, it means different things for different person. Yeah.
Right. When you're talking about like portfolio construction around here, it's interesting because I'm also interested in terms of how much are they actually changing or adding, say, for example, an ESG layer, or say, hey, I want to do something impactful. So out of 100%, do you see like a dramatic increase, like from 5 to 20, just what I've just mentioned, or something a little bit more different? Or when you say as well, there's ESG level of investing or having an overlay and also impact investing as well?
Yeah, I think to answer your question, again, if you go to on the thematic side, right? So in your whole, let's say I have $100, how much would I be putting my money into ESG related thematic funds? That might be 5-10%, by the way, right? So small amount. But when you go to my second part, which is the portfolio construction, it's more like it's all or none, right? So either the entire portfolio is overlaid with ESG, i.e. screening, negative screening and positive screening, or not. So that's, we actually think that is more like all or none, rather than, okay, in your portfolio, whole portfolio talking about, right, across different banks, 20% of that is still ESG, because that's more on the thematic side, in our opinion. So on the core side of things, we tend to see clients, and we've been educating and talking to clients about, you either overlay it or you don't, right? So on the longer term side, the impact investing side, I would say it's there, the demand is there, and we see the allocation there, but small in the beginning, to be honest with you. It's still the very beginning stage of the whole sort of asset class.
Right.
Because I think I think it's in one of your questions later on, I think people always also find it difficult to do due diligence. And therefore direct investing becomes a little bit harder. You almost need like a team, professional team, and family, and clients who have bigger and sophisticated family office might do more of that, because then they can do direct investings themselves. Or obviously they can obviously use one of us, banks to help them out with due diligence. But I think that's where, again, capital commitment is a long-term capital commitment. It's not a fund you can get out tomorrow, right? So it's not liquid. And therefore clients will want to do a lot more upfront work about it before they wanted to put in money into it. So that, I think, is taking time. They're trying to find the expertise, but we do see that demand is growing. Okay. Expertise are also increasing as we speak. Family offices, some of the bigger ones have ESG staff looking at deals. Yeah.
Well, definitely, that's what we see as well. There's a lot more hiring in terms of people looking more into saying, with the coining the word sustainability analyst or ESG analyst, etc., etc. So
it's a new job.
It's a totally new job under COVID. So which is a good thing. At least it's not a charity anymore.
That's right.
But of course, if we go back to the portfolio or the impact investing, do you have any examples, or your clients will be looking at, say, for example, like alternative protein, or they're looking at air, wind, energy power, something more hardcore or infrastructure? Do they have any preferences these days, or just because everyone's talking about like Beyond Beef or Impossible Foods, everyone's looking into, hey, let's go into cellular or
Yeah.
cellular
Yeah.
meats around here. Any particular kind of areas that they're looking into these days?
I mean, you have touched on a few, but I would say in the last 9, 10 months, technology is still the biggest thing, the biggest theme. And if you have seen also how technology, companies have grown a lot in terms of evaluations. But like electric vehicle is a new theme. We've started to see a lot of inflows into that sector because of, again, it's environmental stuff, healthcare, and they're all, again, sectors which are attracting a lot of interest. I would say on the alternative protein side, and other things like solar energy, those are being talked about, but you're seeing less actions on those. I think they're just starting to be like in the talks, whereas technology, healthcare, electric vehicle has been talked around for some time and then now putting into action. So I think it's just, again, with a lot of things, as you know, with clients, there's a lot of talking and there's a lot of understanding, educating, then they put the money to, it's very hard to take clients' money, so.
I know, I totally understand.
it's a long cycle, like the selling cycle and the educating cycle could be 3 years long. So I think over time you will see a lot more demand into those, those areas that you've mentioned. But I think right now we're seeing still mainly like technology, healthcare, electric vehicles and things like that. Yeah.
Yeah, it's interesting when you bring that up as well, because especially with family offices, well, 3 years is actually a very short time. Some of them just never change. They say, okay, let's do property. Okay, after 10 years, let's keep on doing property, etc. etc. Forget about these things. Yeah, you touch upon EV as well, electric vehicles. That's definitely one of the very hottest topics of these days around here. And yeah, we were looking into EV vehicles like 5 years or 6 years ago. And now people are suddenly, okay, because of Tesla and a lot of different companies, yeah, let's actually do it now, okay?
Exactly.
But it is a process. It is a process that we find it very difficult too as well.
Yeah. And by the way, going back to our very first beginning conversation around this whole sustainable investing, I mean, you're right, it's not a charity, it's about investing, right? So the investment process is there, and the investment process isn't really that different from all the other investing processes. But it's new and therefore it's taking time. But at least the good thing is, at least with, I mean, the silver lining is we don't like the pandemic, but the pandemic can actually make this happen in a way.
We bring out something good out of the bad
exactly. I mean, we don't like, none of us like it, but this is, it's triggering people to really put their mouth into actions. But it's going to take time. Yeah.
Well, yeah, it's definitely going to take time. And one of the things that we also touch upon from my side, from my work, and also what you've just mentioned about is the due diligence part in terms of actually screening and also understanding, investigating these companies as well, because many of these companies are not listed. They're not PEs, they're not list-go companies. And many of them, even if they're list-go company, it's got to be like, especially in China, it's a big backhoe as well in certain cases.
Yeah. You have actually raised a point. So in China, a lot of these things are like environmental protection, social stability. These are all big things that the government's talked about, but it's vague in terms of actually what it means. So I think there's a further sort of education needed and discussion needed with clients to really suss out what are you looking for and what are you trying to achieve, and therefore let's look for the solutions for you. So I think in China clients, we're seeing also a much longer process as well. Yeah.
Yeah, it's interesting because when we're talking to some investors and clients as well, the only market that's moving right now is China. So if you're investing into a company, you don't want to invest in a company inside a country that is not actually operating. So most likely they'll be looking into.
Also true. Yes.
They're looking into Chinese companies, and one of the things that we tell them and say, hey, you don't have a visibility. We have to actually do the investigation because we have people on the ground here. So from your side around here, apart from the investigation or part of the investigation, well, the most challenging aspects for you to tell your clients, okay, did we do any investigation, or what areas you have to educate them more in those areas?
I think people are still struggling with a framework of due diligence, right? Because it's
Right.
not a traditional, you can just look at, oh, let's look at a company, right? It's not a traditional way of like, an investment banker going out there and do a due diligence of a company in terms of valuation. So I think people right now are still trying to find, okay, we don't think that the traditional valuation model works or is not perfect for evaluating ESG related investments, but
Yeah.
what should it be? I think
Yep.
I think everybody has a slightly different definition. I'm sure you look at it differently and somebody else will look at it differently. So that would evolve, and we have not yet seen any sort of one common model coming out from client side as to, even on our banking side,
Yep.
it's not as one street, because you look at a company going for IPO, it's the 100 things that you look for,
Yep.
right? But for ESG, again, everybody's looking for slightly something different, and the evaluation metrics is not standardized yet, and we may
Yeah.
not even get to a standardized model over time even.
I don't see any standardization coming
No,
yet, because the whole thing about sustainability, it's not even standardized yet in the
that's
industry.
right.
So,
Exactly.
so, so if the industry is not standardized yet, then how are we going to evaluate and to see the value and also investigate how these companies are? One of the things that we do is to protect the investors is actually, let's say, hey, let's see any red flag coming along here.
That's right.
Are they actually making the meat, or are they just telling people that, hey, we just buy the meat from 7-Eleven and then we just
Right.
put it in the microwave?
Yeah.
And if they have a criminal record or not. So it's pretty much like down to investing back into the innovation companies. How do I actually evaluate and investigate how these innovation or startup companies are these days?
Yeah.
Now,
That's
going back to your clients around here, when they're saying, hey, I want to look into ESG, I want to look into impact investing, one of the questions they should be asking is, okay, what kind of returns am I getting? And of course, we're not like a few years ago when people are just thinking about, okay, charity, okay, you're not charity. So what are the returns? Are they demanding very high returns, or they say, hey, I want to put $100 to you today, give me back $200 tomorrow, which that's what everyone says these days. But do they have a um, more open area, a more open mind, and say, hey, because it's ESG, we're not demanding a high return, but we can actually accommodate a little bit more longer than normal investments?
Yeah. I think a couple of things to your question. So number one, some investors are still in the perception that it's a drag to return.
Okay.
So we're still in the process of demonstrating to clients that if we do it right, it should not be a drag to your return, because it's still, at the end of the day, is an investing tool, right? Again, it's not a charity. If you do charity, you can do charity, right? You can have your own
Yep.
foundation and do charity stuff, right? So this is investing. But a lot of clients still have the mindset of it's a drag to your overall return. So that's step one. Step two, what do they expect in terms of the absolute return or the excess return? Actually, people at this point are just trying to see what this is all about, and so they don't really have any strong expectation and tell us, hey, I think it should be double digit, or I think it should be 5%.
Okay.
Nobody's really having that notion at this point. They're just trying to make sure that it's not a drag.
Right.
And they do have, to your point, a slightly longer time horizon. However, one thing that we have to know, as we've talked about earlier, right, there's a lot of inflow of money into these companies, and therefore, in itself, it's sort of like it's chicken and egg, right? You kind of, because of the inflows, because of the interest and the demand, it's causing an increase in the overall performance and returns and valuations, and therefore, I'm not saying that it's a bubble, but I'm saying it's a little bit like cause and effect. Right. So a lot of money flowing into those things, and therefore, it's better performed at this point. So I think clients realize that to some extent. Some of them are still like, okay, well, let's see, we'll give you them, we'll get the money into this thing and then see how it goes. But I would say people have not yet, I mean, again, over time, it might change, have not yet demanded let's say a return, or a particular percentage of return that they see as reasonable and expected. People did want to make sure that it's not a negative drag to their overall return to the portfolio.
Yeah.
But
That's
again, but once you
definitely.
get to the, but you want, when you get back to the thematic side though, that's different. So
Mm.
again, go back to the satellite part. If you're getting into the thematic funds, some people were like, okay, well, if I do technology, then I expect to perform better than MSCI technology. So different pockets, no, seriously, right?
Yeah,
Different pockets
yeah,
of
definitely.
spectrum of stuff, then you have different expectations. The longer term impact investing, private deals, right? 10-year commitment type. I think it's harder to have an expected return in that space. But although people obviously want a higher return because of lockup of capital for a long time, but for thematic stuff like short-term stuff into funds, I think people do have a return of, like what you see in the technology sector and healthcare sector these days in terms of the funds performance. Yeah.
Yeah, definitely. It really depends on if they actually follow Tesla or not. So
Exactly.
if they follow Tesla, then it's like, hey, it's going up like
It's
on a daily basis, it's going crazy. I want that too as well. But hey, you're just investing into agriculture or something
yeah,
else.
yeah.
It doesn't work like that. So
That's why
it is
for
got a very different view in terms of how their expectations are until they before they actually see what kind of things that they're seeing outside, and it
yeah,
affects how their
yeah.
mindset are.
The more I guess the more visible, observable data there is, the more expectation there is, right? Like for instance, if you're investing into a fund, it's liquid, it's
Yeah,
NAV every day. Look
yeah,
at this underlying stock, you can see on Bloomberg. So you have an expectation, right, of how the fund manager will perform in selecting companies. But the more opaque things that you're investing into, then the less likely they will have a hard expectation. And that's why we have to work with the client to make sure that they understand there are, again, spectrum of investing from a sustainability perspective.
right.
Shorter term, more visible stuff, to longer term, more opaque, more direct investing. And people cannot like kind of all mingle it together and think like, okay, what's my overall return?
Right.
It's going to be getting very difficult to do that. Yeah.
It is difficult, especially with the competition outside, until the client comes in, and the client always comes in and say, "Hey, the guy next door is actually giving me
Yeah,
like
that's right.
2% more. What's
That's right.
happening on our side around here?"
That's
So, but
right.
then again, well, probably because of the timing, let's go to the last question around here. And this is really much about the expectations of how the clients are, because they're looking at different things, we're looking at different things. So one of the things is, well, we're talking about the vaccines around here with the COVID. So COVID started all, and people are talking about, hey, the vaccines may end it all. Well, of course, from my point of view, it won't end it all just like that. But then again, how does your clients actually feel? If are they seeing that the vaccines is a silver bullet? And that they would say, hey, forget about ESG anymore. Let's go back to traditional stocks. Let's buy something else, buy back property or whatever. Or they're still thinking, hey, this is going to be a little bit more longer term. We're doing the ESG, we're doing the impact investing, we're doing the innovation. Let's keep on moving along here. So what's
Yeah.
the viewpoint in terms of how the future is with the vaccine within,
Yeah.
let's say, 2021, 2022?
Yeah. Obviously, I can't predict the future. Otherwise, I wouldn't be here. But from
None of
what
us
I've
can.
heard, if I can predict the future, I'll be like, not doing this
Oh
job
yeah.
anymore. But I think from what we heard from our clients, I mean, vaccine will be a good thing. Nobody will, challenge that. It's, we can return to life as normal. I can go out and do shopping and do all kinds of stuff.
Yeah.
But beyond that, I think people are not going to change this idea that investing ESG is a component of your overall investing. I think that will stay. I don't think they will just say suddenly like, I don't care about anything anymore. Like, I don't think that will be the case, because again, ESG and sustainable investing has been a topic around for a few years now, more than a few
Right.
years actually.
Yeah.
So it's not suddenly just came up because of the pandemic. The pandemic had only made people put things into actions. So we actually, and we don't, and again, subject to, over time, how the performance of these things, whether it's a bubble or not bubble, even when there's a bubble and there's a correction, I think people will continue to stay invested from an ESG perspective. Now, again, that's based on what we heard from the clients. Time to tell, right?
Yep, that's how it is.
Whether that is true or not. I mean, for the sake of the world, we hope it will stay, right? For the sake of the world. Yeah.
No, definitely. I think we had enough of many years of greenwashing already. So let's really start putting the money back to where our mouth is, and actually
Yeah.
do something to help protect the earth, and not
And the other thing is, I mean, obviously, there's also a growing trend of, clients are starting to pass on their wealth to the next generations.
Yeah.
And this ESG concept, sustainable investing concept, is so much more into the millennials. I mean, I'm not saying generations like us are not into that, but the millennials are definitely into this idea.
Yeah.
And so we do think that as what time goes by, as wealth is passed on to the next generation, this will probably become even more important to them, to the clients.
Well, definitely. I hope it actually stays with the second generation and third generation of these family offices as well. The next investors coming in, because the planet is not getting any healthier. So,
No.
so the thing is, if we don't do anything right now, well, we're all gonna die pretty soon.
Yeah,
Which is
like
really a
some of that
grim picture around here.
funny. Sometimes when we interview for candidates from school, right, in the undergrad program, sometimes in the job interview, they will ask us, so what do you do as a firm in ESG? So again, 5-10 years ago, nobody would ever ask that question.
Yeah,
right?
exactly. That becomes
now,
a normal standard. That's it.
That's right. Now they expect the firm, otherwise they may not join the firm. So
exactly.
So with that mindset, and that's, we've seen that for a year, a number of years now, at least for 3 years now, where undergrads start to ask these questions into interviews with firms. So we do see this sort of principle staying, if not becoming even better and bigger and more robust in the future. Yeah.
Yeah. Well, time's pretty short around here, but great conversation with you, Florence. Thank you very much for coming together with me here today. Great to see you. All great insights around here. So thank you very much, and thank you everyone for joining our session too. So thank you.
Take care.
Bye.